Hi, this is Randy Finney with Right Side of the Chart, and this is video number 2, I believe, for Tuesday, April 8th, 2025. It's 1:30 p.m. Eastern Time, so a little after midday, mid-session, update. Let's talk about the markets and other things too, because it's a good time to start spreading bets. The market, to say it's volatile would be an understatement. So let's start out with QQQ. This is a chart I gave you this morning. With the pullback targets, we hit that those reaction highs from yesterday, which were the key resistance level, and it was just above the bottom of this gap right here, and that proved to be a very timely reversal point for active traders. Actually exceeded my pullback targets a little bit. I think I had QQQ going down to 529.84 on that first post I gave you for calling for a 3% drop. We've gone through there. I still suspect they're going to turn around, reverse it today, and put in a green close today. So we're just pointing out the additional support levels. You have this reaction low, quite a few here, and a lot of volume. You see the volume price histogram bar comes in down below. So we're coming up on support. And anything's possible. In fact, I mentioned to you in the first video today, could have been in one of the static posts. I'm very open to the fact that could be it. We could have saw the end of the bear market rally before we go on to the next downside targets, and take out the previous lows. It was a 10% bounce from lows to high, and that I don't even think that includes what happened in the futures. That's just right now in QQQ, 10% counter trend bounce. I was calling for a maximum bounce of 16%, so better than roughly 2/3 of the way there. But again, I do favor more upside today. That's a 15-minute chart. There's a 5-minute chart. You can see that uptrend line on the 5-minute chart. We're coming right into it right here. You have numerous reactions right there. Backfill of the gap. Traders gobble up these gaps. If you're new to the site, you haven't heard this. If you've been trading for a while, you've heard me say this many times. This is when technical analysis shines. This is when my style of trading shines in periods of very high volatility and fast moving and very fluid and dynamic fundamentals, meaning the news headlines. Trump is about as erratic as they come, these trade tariffs in the news, and you see CNBC again today. I've turned it on just to get bits and pieces around the turns in the market, and they're hypersensitive now because they published a false headline yesterday. They actually contributed largely in part. That's when that really took off, the intraday spike. And again, we were already long into it, welcome it and all that. And that's where we stopped today. But now they have to be, and they're acknowledging the markets are hyper focused on any headlines, looking for positive, and we haven't seen anything positive. So I'm going to put that line back there where it should have been. It was on one of the charts. So that's it. Still favored. I think this is a good time. We overshot my pullback target by a little bit. Still looks good in my opinion, and you can draw little short-term uptrend lines because again, what I was getting at a minute ago, when the fundamentals are up in the air. Now you hear analysts are running around. If you've turned the TV on, or reading news feeds, analysts are running around literally like chickens with their heads cut off. They don't know up from down, left from right. They're revising their freaking targets for the economy and for the S&P 500 and everything down. They're all over the place. And again, this is when technical analysis flourishes. Why? Because you can't use fundamental analysis is garbage right now. It's useless. How are you going to predict Apple's next quarter? Apple doesn't know if they're going to get a pass on the tariffs or not. They certainly can't snap their fingers and shift all demand into U.S. or outside of China to a more favorable country like that. Obviously, that takes quite a while. So that's just one of a gazillion examples. So again, my takeaway is if you're trading off the news and the headlines and you're waiting for the next tweet to come out, good luck with that. Good luck getting in front of that. All you can do is trade off the technicals, and that's what we're trying to do here. So, big picture. So this is just near term, and I've made it very clear, and I always do, that what's active trading stuff and what's long term. If you're keeping your eye on the prize being the final target. Down here, we're still above T3, so nothing's changed, and I still expect a reaction. I'm still favoring more upside. I still favor a green close today, even though as I speak right now the S&P just went red and it just went green as I said that. I'm looking at the futures. Let me see the spot. Yeah, the SPY 0.05. Somebody asked today my and I've shared this many times since last year. These are the same long-term targets I've had for the S&P, and I did put a chart in one of the comment sections. Yesterday we hit. I got to move this out. We hit T2, T3. Remember, T3 was laid out back last year when I gave you these long-term targets, and we hit that yesterday. If you're new to the site, I always say I always cover a little above the actual support level. I expect a reaction when I'm short, and when I'm long, I'll always sell a little shy of the resistance level. In other words, my targets are support levels, reactions are likely, and so, for example, the low yesterday was 481.80. You're talking 1.75 points on a 480 point security, a mere fraction 1%. So that is for 110% considered a hit because you wouldn't cover it. You wouldn't set your buy to cover limit order at 480.05 because if everyone else sees the same level I see as support, they're going to step in a little bit early, as I often do, for the same reason. I'm not going to try to milk out a mere fraction of 1%. Mere basis points and get greedy on a trade. So I tend to, take profits a little early. So I just wanted to set that out for new subs, that's not where you set your limit orders. And it's all relative. There's no set formula. If it's a 48 or if it's a $4.80 security, yeah, it's going to be within pennies. If it's a 480 point security, it's going to be within a couple bucks. Again, it's all relative in percentage terms, not dollar terms. Okay, those are the long-term targets. T7 still down here. That's still calling for a total drop of about 42% on the S&P 500. I'm very, very much open to longer term, but that's just right now. So this is just the roadmap. We're gaming this thing, and that's it. All I can tell you is we hit support. That support level yesterday was the all-time highs back in 2021, right there when the S&P peaked. Coming into the beginning of 2022 before that bear market started. And that's where both man and machine, meaning the algorithmic trading programs, will step in and buy. And then whether we get we already had a reaction. We had a 10%, well, I don't know what it was in SPY. Off the bottom there, the S&P was up about 8.87. So like I always say, I trade the NASDAQ 100 because it's simple. I'm either going to be right or wrong on my directional calls on the market, and I'm just going to get paid more if I go with the NASDAQ 100, unless there's something big going on in the financials. That's where you get the higher weighting in the S&P. So that's it. And basically backfill of today's gaps. Those are the gaps are these yellow lines. That's where we closed yesterday. Backfill in the gap on SPY. Backfill on the gap and a little undershoot. There's a good example. The powers that be will take you out. If everybody's looking to buy the gap, or some traders might jump the gun and want to short a break once the gap's taken out, that's premature. You can always give a little room on your stops is what I like to do. And that's it. So that's it. Still maintain another thrust up. I think this is a good buying opportunity. This pullback overshot my NQ targets by a hair. Gave you this morning 1, 2, and was that it? Let me see here. First post of the day right here. NQ approaching resistance. Here's the reversal trade. There's the chart. Yep. That right there, that was at 17,700-ish level, and back to where we were. Yeah, just a hair over there. I had the hand, I had it lined up. I had a hand drawn in. There's the number there, 17,662. Overshoot a little bit. Support there. I don't start to worry until we really take out this level, that lowest level there, about 17,000, and I don't think that'll happen. I still favor another reversal today. So again, the active trader and me long and strong at the moment. You can see also that high when we had an equal high. Remember, negative divergence, you either have to have a higher high in prices with lower highs on the indicator, or equal highs on prices and negative. So it's not the best divergence. It's only a 15-minute chart, but you can see negative divergence on the PPO and about equal highs on the indicator. So all right, let's talk about other things. So Again, you have the long-term targets; they haven't changed. You have my thoughts; still looking a little more upside. Market is just, we had that nice reversal today. Again, day traders are just printing, not day trade, active traders are just printing money in this market. It's just so conducive to trading. And if that's not your cup of tea, again, stand back, do paper trade, do small amounts. Or just watch and learn. They'll always be. That's, if I'm right, this is a bear market that's just started, and we're just on the first leg down. So, plenty of that, more of that to come. And volatility will probably be here to stay for a while. One thing we're seeing. I'm going to sidebar it here. I always do this and talk about fundamentals and what's going on. So you have like them or don't like them, it doesn't matter. I think most will agree Trump has an ego. To say his ego is the size of Texas, I think, is an understatement. So he's a very macho man, ego, self-centered and egotistical. So he's not cowing down on the tariffs. And of course, the way he talks, it's like I always say, you attract more flies with honey than vinegar. But he is complete vinegar in all of his dealings. He'd probably get a pretty good deal done if he would just not. And the problem is when you do that to countries like China. China's very aggressive, hardcore. It doesn't work well. You put two bullheaded people in a room together, and they come out hot at each other. You're just gonna make things worse. You're not gonna have a deal. So whatever. Where I'm going with this is this, to me, and I haven't heard this said, this goes beyond the trade war. There will be a resolution. Remember, you're listening. I'm sure you hear the headlines. The China has a lot more to lose than the U.S., as do most other countries. We buy a lot more of other people's shit than they buy of ours. That's just a fact. And so therefore, it hurts. Trade wars are a zero-sum game, but they lose a lot more than we do. So there'll be a resolve behind the scenes, and whether it's actionable or not. My guess is they're going to phase in. China will agree to things, but it's not going to be right away overnight. Take Trump's take it or leave it thing. They'll agree to phase in over a period of time, and there'll be adjustments to that. That's my guess. I'm not an expert on geopolitical trade, but take that for what it's worth. But the bigger thing here is China has been increasingly aggressive. They're kind of Germany, World War I and post World War I, when they lost World War I, they were supposed to be demilitarized. They built back. They were aggressive again, and the European nations appeased them, and then boom, World War II started. So China is headed on that path. If you've been following over the years, just how aggressive they are, taking their fighter jets and buzzing the U.S. Jets right off the coast of Alaska. Almost mid-air collisions. What they're doing out in was the Philippines with their warships out there in the sovereign waters of Philippines. Actually, shooting lasers at the Filipino naval ships to blind the sailors, with those bright laser lights, and coming up on that artificial reef that Philippines has created with the sunken barge and all that. In other words, they're imperialistic right now. They're trying to expand. They're doing what Britain did hundreds of years ago and what the U.S. did 100, 200 years ago. And they're there now. So where I'm going with this is bigger. This has bigger implications because it's going to be Trump versus China going forward. Of course, Taiwan. I should have mentioned Taiwan, what they're doing over there, the war games right outside of there. And so, Trump can't show weakness on this. And if he's boxed himself into a corner with his rhetoric that it makes this whole thing kind of tough. I don't know where this shakes out ultimately. I just wanted to say that it goes beyond this. So you have a battle of egos that also extends ultimately to military issues that I think are probably obviously the bigger, nothing's, more important than the threat of ultimate war or military aggression, right? And this is just trade wars, money. You can all live if your 401k goes down 50% unless you didn't plan well and you're retiring tomorrow. So that's just a temporary thing that hopefully for most will be fixed. All right, I wanted to get off that, but I wanted to say again, I'm watching this for those reasons, and I don't see how China's just going to kiss Trump's ring anytime soon. But again, I already proposed what I think will happen. There'll be that kind of agreement that's phased in over time, and then Trump will declare to win, China will declare to win, and blah, blah, blah. Okay, let's talk the markets. Let's talk the other thing. So there it is. So you guys have, we already went this far today. So if we have another reversal here, now that's the big level. This is the 15-minute chart of QQQ. So now let's talk levels. That previous high, that becomes the magic number right now. A breakout above that level will be bullish unless fails, and will be a buy signal. Let's color it bright green. So that's the $1 million level to watch. Let's set a price alert there. We may never see it. You may have just seen the end of the bear market rally, 10%. I was calling for a double-digit rally. We got a double-digit rally. I called for a maximum 16, but that, again, maximum, not so. This could easily be it, and wouldn't surprise me in the least if that was it. And we now go on down and hit my next longer term targets. However, I'm still leaning towards a bounce today, and we've already gone up there. If we get there again, being the fact we've tested that level twice, we will most likely punch through it. Then you have a gap backfill. Here's the levels. I already gave them to you earlier. There's 1, 2, 3 max target right there. All right, so let's see what happens. And if we go down, the levels to watch, let me give you a level to probably bring in the selling pretty big. And that's right here. Let's make that red, about 414. Color it up. It's not the low, but it's where a lot of the post lows, a lot of the pullbacks were contained. So let's set alert there. And that's it. Anything in between here and here right now are noise. Active and nimble traders can game moves off the 5, 15-minute charts, intraday charts. Long-term swing and trend traders, stick with your plan. All right, your plan is your price target or targets. Your stops are going to be determined by those, as well as your average cost and entry price. Everybody's different, so I can't give a single one-size-fits-all stop loss, nor a one-size-fits-all price target for anybody, because again, there's multiple variables. Even myself, even in my long-term accounts, not my active trading account, I scale into positions, I scale out, and that's how I trade. So my cost basis and my price target, or at least my cost basis, won't be yours. SPY, the S&P 500, might not be my favorite index to trade, but it's also a very, very important one to watch because so many do trade it, and it's the markets are close thing to it. S&P 500, massive gap overhead, same story. It's green level. Let me just go right to the highs. Be safe. I'll put it over that previous high right there, the gap, and there's your magic number, green. Set an alert. So if you have both QQQ and SPY, enter the gaps, especially if you can work off some near-term overbought conditions and all that, then that should be bullish, and send it up for a gap backfill. Technically, the top of the gap is right there, a little bit below that level, and that'd be a potential target there. All right, the other stuff. So yesterday I updated wheat, told you wheat just can't seem to get going, and the grains. Well, actually, I take that back because I showed you corn and soybeans. They're still up. They're off their divergent lows. But remember, wheat is still very constructive. Long-term support. So I still like these longer term. And, right now is a time too, and I'm speaking kind of to the folks, probably the majority of the folks listen to my voice that aren't very, very seasoned, maybe relatively new, or maybe doing this for a while, just trying to still find their groove. Then in bear markets, I always get phone calls when the markets drop this much from friends and other people I know, and they, what do I do, how to make money, what do I put my 401k to make money? And there's a point in time where, again, 401ks are limited. You can't short. The shorting's not for everybody. You can't buy commodities in a lot of them. There's nothing wrong with cash. Cash is still paying a pretty decent rate of interest. I'm talking about brokerage money market funds, an option available in every 401k. It might be known as a stable value fund or, something along those lines, but they all have it. And, if the world loses 50% on their 401k and you lose zero, you're ahead. You're ahead by that much. You can look at it that way. You're ahead of everybody else by that much. So in a sense, not only have you made the interest, but you didn't lose 50%. So you didn't go back 10 years in history like they did if they ride out a 50+% bear market. So that's one option there. And then if you do have options in regular accounts, IRAs, brokerage accounts, whether it's IRAs, non-IRAs, things like wheat, corn, soybeans, they're not exciting. Wheat, like I said, can't seem to get started here, but the long-term chart looks constructive. Corn, which we're still long and still moving up, and again, just ideas. But I'll show you the one that's hot now. I'm pressing pretty hard recently. I've been sticking with it. I've covered this for you going back a couple months. Is coffee. I've been calling for a huge drop in coffee because it put in a parabolic top. Let me get to that chart for you real quick. Now, unfortunately, for those of you listening to my voice that do not have a futures account or know how to trade futures, there are no other options. There used to be JO, which was the coffee ETN, and it did a great job of, held coffee futures. To the best of my knowledge, once they retired that a couple years ago, there are no other direct plays on coffee. So if you find one, post it in the comment section. I'd love to know about it, but I've never come across one since. So coffee futures. And I've covered this chart many times, including recently. Coffee tends to go parabolic. It's just the nature of this beast. This is a downtrend line. That's not parabolic. Nice, clean downtrend line. I like to look for divergent highs and divergent lows on coffee on this weekly chart. This is long term. We're going back to the mid 90s here. These are major trends. These trends are measured typically into the high, well into the triple digits, not the high triple digits, but well, some cases. This was a 622% rally from that divergent low back in early 2000 to that divergent high. And the thing about coffee on these highs, let me change colors on my tool here, blue. Like I showed you here, this is called a parabolic uptrend line. A parabolic trend line is one with an increasing slope, and that's what that is. So you can't even draw a linear or a straight trend line when things go parabolic. That's the phrase, a stock went parabolic. That's what that literally means. That's a parabolic advance. There's a strong linear advance, linear decline, linear downtrend lines, parabolic advance. And so I've measured a lot of the drops. Oh no, okay, I can do it for you here, but look, you can see here, this was from that low right here. What I did is measure to that high was 622%. So that thing fell that much that time around. And you can see bottomed here and it went right back to that previous high. Technical analysis works well on coffee. Coffee recently made a new high, but then again, so did most things commodities, because we're now, as I've maintained the case for the last couple of years, I believe in a new early secular bull market in commodities where we're still in the early leg up. However, just like what I think is happening in the stock market, that we're most likely embarking on a new secular bear market, there'll be plenty of bear market rallies and cyclical bear markets within the larger secular trend. So here, again, it doesn't matter if I'm right or wrong, coffee's going higher in 10 years or not. I'm only positioned for today, tomorrow, next week, and next month. That's how I, swing and trend trade. And I can show you, which I have here, once these parabolic trend lines break, let me clear off all my annotations. Here, let me just use red. That'll probably show up well here. There's a parabolic trend line break, drop. And that's, double digit. You measure, I use log scaling. So we went from $3 down to $1. So you lost, coffee lost a third of its value. That'd be a monster short. And then it ended with a divergent high. So it's just trades so well to the technicals. Again, this is my style of trading here. Divergent high, drop, divergent low, long. Went into a parabolic uptrend. Major, big, quick drop. Again, went from 2.6 down to 1.4. Big drop there, cut in half, right? Almost. And then this most recent parabolic trend, which I started highlighting for you a few weeks back. So we need to break that trend line, which we did. You probably can't see it because I know this is a big chart. Let me just go here, change the time frame. Instead of 30 years, let's just take it down to 3 years, and we'll see here. This is a clunky charting. There it is. That's the best, that you can draw that trend line a little better. And, if you zoom in here, that's not my line tool. There we go. That was the parabolic advance. There's the breakdown. Clearly, it broke down recently. I did highlight that, actually. I believe a couple weeks ago, we had the sell signal break of the trend line. And then you can also look at this one here. Let me go back to, let me just set it back to 30 years so before I forget. And all right, we can go back to my daily chart as well on coffee and zoom in there. That gives you a little bit more zoom in. Let's go down to 3 years as well. And you can see here, this uptrend line has been taken out right there. And then you had this area of consolidation, boom. So you have some support coming up here. This trend line right there, 312, 3.2, likely potential reaction point. But here's the thing, guys, and this is why I do these long-winded videos, because I can convey my thoughts a lot better than sitting there and giving you a 3, 4, 5-page written thing on the static post. Once something goes parabolic, from my experience, after a parabolic uptrend, the ensuing reversal comes fast and swift. There'll be little kickback rallies along the way, but my preference is usually just strap in, hold on, and sit tight for the ride. So these near-term targets, just like the stock market recently, blew through a lot of divergences and support levels. And so right here, let me give you right there, I think this is a minimum target right here. You have a couple reactions there, about 2.6. And again, based on history, when you go parabolic, you tend to wipe out the entire previous move up. And if that's the case, we'd go all the way back down here to about 1.4. So that's a likely and potential target right there, calling for you're going from 4.4 down to 1.4, monster short if you get it. Easy stuff. Once you break a parabolic uptrend line, you have no business going to new highs. Not to say that you can't in reverse. It's just unlikely. Again, I speak in probabilities, not possibilities. Is it possible to go up a little, hit your stop, and then turn around and go down? Possible. But it's unprobable. It's unlikely. I don't see that usually. You break down, you have a little kickback rally that never exceeds the high of a parabolic blow off top. And so it's kind of a easy kind of all in, press that short and just sit tight with a stop above the highs and let it run. So there it is. That is coffee futures for you. Oh, KC is a symbol, like KC in the sunshine band. That was, this is where I believe started highlighting it here. You got to go back a few weeks. I covered this usually in the videos. You've had this downtrend line here. After that was the top. And again, on the longer term charts, that was the parabolic uptrend line. We had the sell signal there. We started moving around a little and recently took out that area of consolidation, that support about 372 right there. Took us down to my next target there. And once that goes, we go down to 310-ish. And then once that goes, we go down here at about 254. And again, I'll turn my focus to the longer term charts. This is just a 6-month, 2-hour candlestick chart. The ones we were on a minute ago were the weekly and daily charts spanning decades and years. Okay, I'm going to move on to some other things. I still think OJ Futures is also poised for a big reversal. It's just been in a downtrend, can't catch a bid, but big positive divergence. USO is still right there at that, hair below, but remember we had that other reaction low just below what I highlighted yesterday. Still positive divergence. It was up earlier today with the stock market. USO is going to be a highly correlated trade with the stock market. Let me repeat that. Just like crypto for the most part, crude oil is going to move up and down with the stock market, because if the market rallies, that implies that the worst is over for the trade wars, future economic growth. But then when the market drops, crude will go down due to demand destruction, expectations, all that. We're also starting to really, get the geopolitical risk heated up again. That's not being, I don't think, priced into crude. This is all demand destruction trade, I believe. With the stock market falling, crude's going to fall with it. Again, we're applying the recession probabilities, which they have, at least not by me, but mine are right where they were, 6-8 months ago. But the masses now, the so-called experts on TV, they've quickly backpedaled and shot their recession odds way up and their growth forecast way down. So that's what that is. You're just seeing the sheeple follow those calls, but right down to support. And again, it's all about the market. If the bounce is over and that 10% bounce we just got was it, and we go down and we're going to drop another 15-20% or whatever my next targets are, the crude's going to go down with the market. I can almost guarantee you that, unless there's some massive geopolitical thing that goes on, something going on elsewhere. If the market rallies, crude's probably going to rally, and that's it. So that's it. I already gave you an update yesterday on UNG. Told you that broke trendline support. No bueno. Set your stop below, and you would have been stopped out if you didn't get stopped out right after the trend line. That was the last highlight objective long. And I had to give you an update yesterday as per request. Said, no, we're done. Under the trend line, don't give it any more rope, and that's it. So, and natural gas is still going down today. So that one I'll update next time we get a objective long entry. You know my thoughts on gold and silver, which have not been bullish, remain longer term bearish, even though you might think gold should get a flight to safety bid because of stock market. How much of that's been priced in? Gold's just overowned, overloved, and at this point in time, it's going to be a trading vehicle like the market, and it'll probably go up and down with the stock market too, especially silver. What else? What else do I have for you? I had an alert go off on this one today. PFSI, remember back here, we shorted the three companies in the specialty finance sector. After these bearish engulfing candles, we hit my first target, which was 106 plus the trend line right here. We went down, came a hair close, and just hit my T2 recently now. So that one's hit. Check that. And it's hit again today. That's why my alert went off. Full tag of the T2 level. So that's hit. Let's check that. And now it's simple stuff. A break that's really, really good support. So a solid break, even though my alert went off, you can see if you have to squint to see if you're below it, give it the benefit of the doubt, wait for a breakdown, wait for the market to go down. If the market bounces, it will be at least a net tailwind for the stock. That doesn't mean the stock will go up. When I say something's going to be a net tailwind to the stock market or in any trade, it just means all other things being equal, supply and demand forces frozen equal, a net tailwind will help something go up, and a net headwind's going to go against it. So rallying stock market usually will bring, most ships are lifted with a rising tide, and a falling stock market likewise. So those are still the targets. T3 was already hit. That was the uptrend line. It was hit right there as well. And then the other two, which I favored, the two I gave you my preferred one, Rocket and Coop. And we already hit my fifth and final target on Rocket. And then I told you we're likely to bounce when that trend line was taken out. We did. We bounced. And so these guys are done longer term. This is just a bear market rally, I believe, and there'll be another leg down. And then I turn my focus to the weekly charts. I don't have any position in these. I just wanted to cover it because I had a price alert. And then the other day, somebody asked me for an update on these two. I don't know if they were a new subscriber, just wondering about those stocks, or they knew that we had shorted them back here right off those divergent. The bearish engulfing candles hit 1, 2, 3, 4, 5 targets for I don't know what that was, almost 42% profit on that trade. And then Coop was the other one. Coop actually held up. Oh no, UWMC. UWMC was the other one here. T4 now hit. Oh yeah, let's check it off. It's officially hit. And that was the final target, so that's it. So not to say it's not going to go lower again. Now we're in a bear market. When we shorted these, we were in we were at all-time highs in the stock market when we shorted these guys. And that's just because the chart said these guys were going to go down first. And so no way, shape, or form, you have potential divergence, but you know what happens in bear markets, that could be burned through. At the very minimum, if anyone's still in this, you either lower stops to protect profits or you cover your short. It's a final target. That's usually you're going to get a bounce. I think the stock market will bounce. I think this one will bounce. You can call it a long trade idea if you want to go long right now. If the market rallies, then this will probably rally with it. I just wanted to give that update, and that's it. So all those, that final target's hit too on that one now. Let's see what else. I covered my ZB short today, but I didn't reverse it. I often reverse. I might, but if you remember, I shorted this one the other day, shared it with you. And there was that uptrend line I was targeting, plus price support right there, 116, 113. So a nice pullback in ZB, the 30-year Treasury bond. I gave you the proxy. If you don't trade futures, you could use TLT. TLT right there. You've taken out the trend line now, so that one's coming up on support. I don't have much of an opinion. If the market takes another leg down, they'll start to buy treasuries again, most likely for a flight to safety. But as I said, I don't have the highest degree of confidence in that in the charts right now. And plus, the charts aren't screaming at this point. They just say, get out, take your profits. It was a quick trade. That's all I wanted. The whole Trump's changing the world order here. And people have been talking for a long time about the risk to the U.S. if foreign countries start dumping our treasuries. Of course, the risk of the dollar no longer being the world's reserve currency. I don't know if that's going to happen or when that's going to happen. That's probably more a matter of when than if. But either way, this you could see selling of U.S. Treasuries that offset a flight to safety bid. So again, better fish to fry, in my opinion, is what I'm trying to say. If you took that, either book profits or just lower your stops to protect profits if you want to let it ride. But I can't remember where it was. I know it had already started to turn by the time I covered it in the video for you, but it's been a nice, from the high here recently, about a 6% drop in Treasuries. In the long bond, I usually trade the long bond because it has more juice. It's just going to move more in percentage terms than the 10-year. The long bond's a 30-year, of course. And GDX still looking very toppy to me. That divergent high, which we shorted that. We had our short-term pullback targets on the 60-minute chart, but little kickback rally along with the stock market today because it's a risk-on day, or was earlier. Markets have they're still green as I talk, but we flirted. I covered the markets already. We've been flirting with backfilling the gaps. So when you backfill a gap, then you go flat. The gap is where we closed the previous day. The bottom of the gap, that is. And that's about it. I'll just update the VXY trade. It is still an active trade with a final target up here at this time of T3. For those of you that took profits at T2 yesterday, you were able to avoid at the lows today a give back of over 17% in profits. And I think I mentioned, you trade it with the stock market. So when we hit when the market peaked today, that's when the VIX bottomed today, and that's I always said this, you're trading the VIX, you're just trading the stock market in reverse. So that would have been the perfect point when we reversed our shorts this morning at resistance. I'm sorry, the index longs. That's exactly when VIX bottomed. And it also, not by mere coincidence, right down to that gap right there. I highlighted that yesterday as a likely and potential pullback target, top of the gap. Now, if the market bounces again, which I believe it will, we'll go and backfill the gap. So here's the VIX. You could trade it like a grand piano if you're just trading the intraday chart. So there's this morning high, and then that's again when the stock market. That's the pullback in the stock market. This is today right here. So this is today's low in the VIX when the market peaked. And if you sold or reversed at T2 yesterday, you made another 20% profit on the pullback today, and then you would have covered your VIX short. That's what I did when the stock market hit resistance today, where we shorted at for an active trade and gone long to game that. And then I reversed that back. I'm a little underwater on my reversal point, and not liking the fact this market's not coming off pretty hard off those gaps so far, backfilling. So I won't let either of those trades get away from me. I've got enough book profits for the day that nothing could happen to, I'll set, when I finish this video, sharpen my pencil on the stops that I'm talking about, these gaps right here. So there's, again, QQQ, go down to the 5-minute chart. You can't hear. I'll turn off all the lines. You can see there's the gap, the yellow line. So you can see SPY and QQQ have backfilled the gaps. So we didn't. If it wants to go up, it won't leave any unfinished business. Gaps are often backfilled, not always, but often. And so we could get one last thrust up. If we don't, support. That's a kind of a red flag if broken. But again, give it a little room. Look at these reaction lows, and the way it works is each and every one as broken. It's just a break of support. It adds to the bearish case, the chance we could go down. But again, there's a lot of volatility in the market, so they could do that and then fire off, and some headline comes out and we reverse. So stay flexible, stay nimble. As of now, nothing's changed because we're still holding those gaps. We start going down below, and that's my stops I always set on longs a little bit below where the logical stop. So everyone's going to look at these reaction lows. A lot of traders will have a stop right there. I'll set them a little wider in high volatility. And what I often do when volatility is high, you can take smaller positions. You don't need to put a lot into something to make a lot of money when the market's swinging up back and forth 5-6% plus a day in and day out. It's just like trading a regular bull trend. The market goes up, 1% is an average good day in a bull trend when the market's just slow grinding higher. And so you take bigger position sizes if you're day trading and active trading. And then when volatility is high, take it down light, allows you to use wider stops, and you're also going to have a higher price target to offset the, to keep that nice RR. It's all about the risk-reward ratio. Risk a dollar in loss to make 2 or 3 in profit. ideally. Again, depends on your trading style. The higher your success rate, win rate is, the lower your RR rate could do. So over the years, I've migrated towards a less favorable RR. You know, sometimes I'll even risk a dollar to make a dollar when I'm batting, you know, near 1,000, and keeps me in the trades, keeps them from running my stops. But again, it all depends on the trade, market conditions, and a lot of other factors at the time. All right, I'm going to wrap it up here. We'll see where we go today. Market's still trying to test those gaps. And, you know, not their buyers aren't stepping in yet, but who knows? We'll see what happens today. And at minimum, I'll give you at least another post today before the day is over with some updates, even if it's just a static chart before the close. This has been Randy Finney with Right Side of the Chart. Have a great day. I'm just putting that trend line here for my own sake that I see. All right, pop that trend line. We should run. All right, I'll wrap up here. Have a great day, guys.